So Scott thought it might be helpful if we talked about our joint venture. So HomeRiver Group raised a couple $100 million in December of 21. Actually, John Hirschfeld, Drew, and I were on a phone call on New Year's Eve of 21 closing the deal. So we literally were late to New Year's Eve parties, but effectively launched it in 22. Part of the reason we did this is because we wanted to prove to our clients that we can operate properties while we understand their issues. We wanted to build out the service for clients because we want clients to feel comfortable that we can do everything from cradle to heaven, right? From acquisitions, renovations, leasing, maintenance, management, to even dispositions. So this is a great way to prove it. The other piece is we are investors at our heart, and we've always wanted to be able to raise some money and take advantage of the platform we built. And so this has been a great way to do it. We thought it'd be helpful to share with you guys how we're viewing the market and what we consider as we're doing acquisitions. So we're looking for markets with positive long-term demographics. You want strong population growth. You want diversified industry. You want a positive place to operate a business. And then within those markets, we're looking for 3-bed, 1.5-bath homes, 1,000+ square feet, built post 1979. And we're targeting price points that are generally in the median income and affordability in that market. All of that is created because we believe if you're buying in a market that is consistently growing, it's a good place to operate, where people can afford to either buy or rent, and they can afford gradual rent increases and home price increases. Then you're set up well to succeed in your investment. I
Yeah, I
think you
think
probably periodically see us send you emails as well. We buy homes from clients all the time. A client will just say, hey, I got to sell the home. I have a tenant in there. I don't want to move him out. Do you guys have any interest? And so we buy from clients all the time as well. Go ahead, Scott.
yeah, I think what's interesting too, on this slide is that, we're not shying away from some of the houses where, some of the areas, such as the Floridas or the Texas where, insurance and some of those other affordability measures come in when it really affects your rates of return, because we still think that we can make deals work in those markets. And I believe that if you're doing it correctly and you're really looking at, your expenses with those, you can still make those deals work in those markets. Even though I will say that Florida in particular, with the rising insurance cost, it's becoming more and more tougher, but you still have the ability to be able to really get a good solid rate of return. It's still a fairly strong market. And I've noticed a bit of a trend lately with some of the institutional players out there, and we're not they're going to more less climate impacted markets, which is really interesting, and it's probably the next play, which kind of goes back to your comment earlier when you said that that Midwest market's really going to start to see some increase in appreciation and rent values. That's where a lot of people want to go right now. There's a lot of people tired of dealing with the climate related things.
Yeah, I totally agree, Scott. There is a big trend in the industry, you're right, where they're looking at, hey, where are the less climate impacted markets? I generally think long term, we're still believers in Florida and Texas long term. We think they'll still have population growth, but they are going to have to figure out the insurance market, to your point, Scott, and they're going to have to continue to address construction and building codes, right, associated with high wind damage and things like that. And you're right that I think that'll draw more population back into the Midwest and some of the other markets as well. And that's part of the reason we think when people are investing in single family real estate, they should have a diversified portfolio, right? Like if you're going really heavy in one market and something bad happens in that market, it's a little tough, right? So that's also our suggestion on, hey, picking a few different markets where the long-term demographic trends are strong, so you're diversified a bit. But